My name is Nina Campa, and I am the Assistant Director of Student Life in the Office of University Life. The event is hosted by University Life, Student Financial Services, and the International Students and Scholars Office. So this event is a part of our Wellbeing Initiative, and this will be recorded and uploaded in the following weeks. So before we begin, I would like to welcome David Ostel, our Associate Provost and Director of International Students and Scholars Office at Columbia. So David, if you could say a few words. Oh, hold on just a second. Are you unmuted?
Yes.
Oh, perfect. All right, David, go for it.
Thank you, Nina. Hello, everyone, and greetings from New York City. And I would like to welcome all of you to this very special webinar that we have for you today, Financial Wellness and You. This is a very creative webinar that has been put together by our close colleagues in Student Financial Services. And we are hoping that it's going to be not only informative, but fun as we go through these topics that have been put together very carefully just for you. Before we get started, I just wanted to thank our colleagues within Student Financial Services and within Student Life and ISSO. Our main presenter today is Tricia Kaiser. And Tricia is the Manager and Financial Aid Operations and Training Director. And so having her today is a real treat. And also you've met Nina Campa. Nina is an Assistant Director in Student Life. And Nina, thank you especially for putting together our program today. Also, special thanks to Senior Associate Director of Compliance in the International Students and Scholars Office, Maria Reynoso, for assisting today. I wanted just to bring your attention to something that is an important symbol for us. And that is something that you may have seen already, especially in photographs, online, when you were doing your research for Columbia, and then you started looking more closely at Columbia and then decided that this was going to be your home. And this symbol that you've seen is a statue. And it is a statue of a beautiful woman who is sitting, who is in a seated position, and her robes gathered around her and her arms outstretched. Now, this symbol is alma mater, and the beautiful Latin is an idiom, and it means nurturing mother, nurturing mother. And this is a very special sign to all of us, and especially international students who are coming to us from 150 countries around the world into the fourth largest international student community in the United States, and one of the great communities of the world of academics. And the symbol of nurturing mother is so important to all of us because coming here to Columbia is a safe place for your intellectual development and also to exchange ideas that are new and illuminating. Also, it is a nurturing symbol, which means you are safe here. So I'm hoping that all of us are going to soon meet on College Walk, which is right in front of Alma Mater, and welcome each other as new friends and new persons that are involved with the endeavor of international educational exchange. So again, I welcome you to this webinar. I'm so delighted that you've chosen Columbia. and really, really look forward to meeting you soon. And thank you very much.
Thank you so much, David. Now we're going to hand it over to Trisha Kaiser. She is a part of the Student Financial Services Office, and her position is the Financial Aid Operations and Training Manager. So please help me welcome Trisha to the floor.
Nina, thank you so much. And David, thank you so much for the warm welcome. We're so glad to be here today. As David mentioned, this is an initiative that we've been working on for a little while. We know that it's important for our international students to have good resources here on campus relating to things like financial education and really just knowing where to go with your questions. So today we had a couple of questions come in ahead of time. So we are really glad to be able to address those in this presentation. And one of my promises as I'm pulling up my PowerPoint is that if there's something that I can't answer for you today, my promise is to work on finding you a resource to share with the material. That's something that's really important to me to make sure that you're getting the information that you need. So with that being said, we're going to go ahead and get started. So our agenda for today, we're going to talk a little bit about the difference and what they are, financial literacy and financial wellness. We'll talk about consumer finances with each of you being a consumer as you start your endeavor over to the university, as well as understanding credit. We'll also talk a little bit about developing a student spending plan, so understanding how to budget appropriately, and some key offices and contact information throughout the university. And lastly, we'll also talk a little bit about what iGrad is. It's the university's financial literacy platform that you as a student have access to for free at no cost. Now, as well as after you finish your studies. So it's a really fantastic platform, and most of the materials in this presentation were built from that platform. So if I know it, you know it. It means you have access to the information. So I'm really, really thrilled to be able to share that resource with you. I do want to mention that we are recording today's presentation, as Nina mentioned, as well as we're sharing these materials plus some other supplemental materials after the presentation. So you don't have to take a whole lot of notes as you're going through. Of course, you're welcome to, but if there's something that you miss, please don't feel like it's a detriment. You'll be getting everything that we have here today after we finish our conversation. All right, so what exactly is financial literacy? Okay, I like to think of it as the path to financial wellness. And if we think about it in more literal terms, it's a set of skills which encompasses knowing when and how to find reliable information to make a financial decision, knowing how to process financial information to make sound financial decisions, and knowing how to execute financial decisions, adapting as necessary to stay on track. So it's a lot of knowing. That's the educational component. Now, the difference. What exactly is financial wellness? That's really your financial well-being. And it can be defined as a state of being where you have control over your day-to-day and month-to-month finances. You have the capacity to absorb a financial shock. You're on track to meet your financial goals. And you have the financial freedom to make the choices that allow you to enjoy life. Now, I know that sounds a little bit ambiguous if we were to say it that way. Not everybody thinks about financial anything within the realm of wellness, but it absolutely is a component of wellness. It's extraordinarily important. We know that finances can be a cause of stress, and stress can be an inhibitor to your education. So we want to make sure that you have this information, the education side of it, the literacy component, which is partly what you're doing today, to get to the wellness component. Now, one of the most important things to realize between these two is that in addition to that knowledge component, financial literacy has an action component. That's the ability or skills to put your financial knowledge to use, right? So we have to do a little more than knowing in order to get to that place of financial wellness. Now, why do we talk about it in general? Part of a study from the 2020 CIA Institute GFLEC Personal Finance Index, and that's the most recent version of this study, talked a little bit about, it's a long-term project that annually assesses financial literacy among US adults. Now, bear with me, I know we're talking to an international population, but there's a reason that we're chatting through this today. Now, in this report, some of the key findings included that many Americans lack personal finance knowledge that enable sound financial decision-making, having only answered 52% of the questions asked correctly. So that's not a really stellar number. And in addition to that, many individuals do not know what they do and do not know. As an example, while borrowing is the functional area of greatest financial knowledge among US adults, only a small number of them really feel that they're knowledgeable on that topic. And also, comprehending risk is the area of lowest financial knowledge among US adults. However, that's the area where people feel the most confident. And that's all information found in this study. So why do I bring this up? I want you to know that you're not alone. Americans have a lot to learn about American finances as well. You're not the only people that have a hard time with it. That's why we do these presentations for all of our students, but in particular, I know that coming into a new country and kind of acclimating to things can be really difficult and challenging. Know that you're not alone. We're all here to support you and that we all have similar challenges as far as finances go. Now, basics, right? I'm going to talk a little bit about financial institutions. And what that really means is it's a company that's engaged in the business of financial and monetary transactions. And when we say monetary transactions, they can be the things that most of us think about, like checking or savings accounts, your traditional bank accounts. But some of them can also offer things like mortgages, insurance opportunities. They can offer investment opportunities. They might be a brokerage firm. So there's several different types. For this presentation, the ones that we'll focus on most are going to be banks and credit unions, predominantly banks. And basically what they are institutions that offer insured deposit accounts like checking or savings accounts. And they may have those other products that we talked about, like loans, mortgages, credit cards, retirement or investment services, or other account holder benefits. Now, in general, to open a checking or savings account, most financial institutions need you to verify your name, your date of birth, your address, and ID number. Now, when they say ID number, that typically would mean a social security number. However, that is not a requirement to open a US bank account. You also, in most cases, can use your individual tax identification number or ITIN. And in some instances, depending on the institution, they may accept other documents as well. So the most important thing that you can do is get in touch with any particular institution that you're interested in pursuing or opening an account with and ask them specifically what type of documents they would need in order for you to pursue that process. Now, one of the other things that I'll be sharing with you as a resource is through the Consumer Financial Protection Bureau, and they have a really nice checklist of the questions that you may want to ask as you're opening an account. So you'll have that resource after the end of today. Now, financial institutions are also generally considered to be insured financial institutions when they are designated so through either of the two entities listed below, okay? The first of which for commercial banks is the Federal Deposit Insurance Corporation, and commercial banks are your typical bank as most people understand them. And the FDIC insures deposit accounts up to $250,000. Now, for credit unions, and what a credit union really is, it's a lot like a bank, but instead of it being a for-profit business, it's a member-owned financial cooperative. So instead of having stakeholders, they have their membership that they answer to. They have very similar criteria as far as being insured. The National Credit Union Administration, or NCUA, insures their accounts up to $250,000 per individual depositor. So this isn't something that you have to remember, but it is something that you want to be aware of, right? So that when you're looking at different financial institutions to set up a bank account, you know exactly what type of institution it is based on the protections that they offer. And most of the time, you'll see that designation directly from the bank. I do see that we had a question come through about asking how you might go ahead and get an individual tax identification number, ITIN. That's actually something that my colleague Maria may be able to address a little bit better. Maria, did you want to take a stab at that question? And if not, we can also touch on it later. That's not a problem. But for now, we will make sure that we address that question and talk about the resources that the ISSO office has available to assist you with that process. Now, one of the big things we talk about with financial institutions are the products they offer, and one of them inevitably is going to be related to credit, right? What exactly is credit? Very simply, it's the borrowing capacity of an individual or company. However, I really like to think of it as the definition listed below that. In its most basic sense, it's the level of trust that a borrower must earn before a lender will be willing to lend them money. So if you were to think about it, if you have your best friend, as well as an acquaintance, one on your left, one on your right, and both ask you to borrow $50, what do? you think about how well you know this person, the history that you have with them, have they borrowed money before? And if so, what was that experience like for you as you consider whether or not you're willing to lend this person funding, right? Give them the $50. With that being said, you're more likely to do that for the person that's on one side that you know really well and may hopefully have established a very good relationship with, rather than somebody maybe on the other side who you're just not familiar with and don't necessarily know a whole lot about. And then, of course, the individual experiences of each of them. Your friend certainly could have had really great experiences, or maybe you've lent them money before and it didn't go so well. So these are all things that you can kind of equate to the idea of building trust. Credit companies work the exact same way. Now, you cannot borrow most types of credit without a credit history. And when we talk about credit history, it's just the track of your credit record. Now, with that being said, lenders evaluate credit to determine your eligibility to borrow. However, each lender does that with different criteria. There's not one set standard across the industry related to credit. It depends on the type of product that you're pursuing. It also depends on your individual history and how that individual company assesses that information. Some instances may require that you have a co-signer, which is somebody that you add to the loan to bolster your credit history and kind of support your effort. And then beyond that, you have the opportunity to start building your credit just by starting to actually apply and use it. Okay, very simply, you borrow money and pay it off. However, extraordinarily important that you do that on time. Now, you might have noticed as we've been going through this presentation, there's a lot of pictures and there's also links at the bottom of the screen. These are resources directly related to what we're talking about on any given slide. So on the right-hand side, you'll see that there's this information related to everything you need to know about credit. This is one of iGrad's Start Here guides. They have several of them. I want to say last count, I saw more than 20. On several different topics. And this will give you just kind of the starter information to get you going on understanding any individual set of information for a plethora of different topics. Now, continuing on, okay, when we continue to think about credit, most lenders use what's called the FICO or Fair Isaac Corporation method to determine your credit score, or otherwise 3-digit numeric representation of the information in your credit reports. But very simply, are statements that have information about your credit activity and current credit situations, such as loan paying history and the status of your credit accounts. So the credit report houses that history of information, and the history of information builds your credit score. Credit reports also include things like personal information, credit accounts, things that you borrowed and open accounts that you have, collection items, public records if they apply, and inquiries, right? Anytime that you look to potentially borrow funding, that's also retained there as well. So it's more than just the track record of your credit. It's also the information and history surrounding your credit, applying for it, and how you've maintained it. Now, those FICO scores or credit scores range from 300 to 850, and very simply, the higher the score, the better your credit. It's a representation of the information in your report. Okay. Lenders may consider additional information from your report, as well as information from any application to determine your eligibility to borrow. It's not necessarily just assessing a score, right? Some of the things they'll look for are the number of credit inquiries that you may have made. They may see employer information. They might also see your home address and other residences that you've maintained. And as far as those applications, some of those include things about asking about income, for example, and they wind up assessing what's called your debt to income ratio. Do you have enough income to support the level of debt that you have and to accumulate more debt and still look like you have the capability to pay it off? Now, on the right-hand side of the screen, this is information relating to what you could typically anticipate to be a poor, fair, good, very good, and exceptional credit score. But again, it is important to remember that these are generalizations, right? Each individual product and institution that you pursue is going to evaluate this a little bit differently, but this is a good rule of thumb and range for you to review. I do see that we had a question come through on making payments as an international student and if it's only through wire. So my understanding is that it is no longer just through wire. We do have information in this presentation related to who you can contact for additional information on that point. So I will make sure that I share that with you so you have the opportunity to get the best clarification possible. Now, continuing on with credit, right? Your FICO score, that credit score, is based on a couple of different things. There's 5 major buckets that build up that set of information, right? The biggest of which is your payment history, or the timeliness of your payments over time. This is why it's important to make sure you pay on time, because it's by far the largest bucket of information, 35%. In general, you'll see that your score is higher if you pay on time. However, missed payments have an immediate negative impact. Okay, so once you start missing payments, you'll start to see that credit score drop very quickly. Unfortunately, it takes a lot longer to regain that trust, right? So if you want your credit score to go up, it takes more time to build it back than it does to have a negative consequence from a missed payment. Now, the next one is amounts owed, okay? That's also called credit utilization. And it's how much you owe in relation to the total available credit at your disposal, right? So if you have a $1,000 credit card, how much do you actually owe on it, right? The recommendation is that it's about 30%, so you don't want to have more than $300 on a credit limit of $1,000. And that represents room to still potentially borrow additional money. And it also shows that you don't necessarily need to exhaust the amount of credit that you have. And again, that one's important because it's 30%. It's another high bucket. The next is length of credit history. It's how long you've been borrowing money. Now, this is a little bit interesting to think about, right? It's not just you got your first credit account and you've been borrowing since, right? When we talk about credit history, it's the current open accounts related to your credit. So let's say you get a credit card, your very first one, and you open it up, and then you're here a few years later and you look to open another card, right? However, you don't think you'll be using the first one. If you close that first account, your credit history is going to start just with the new card that you have, and you lose all of that positive credit length that you've been building on. So it's something to think about as you're maintaining your credit. Now, it's not the most important thing. This is only 15%, right? So if you have a reason to close a card that makes sense to you and you really feel it's important, that's certainly okay. But you do want to be aware that it can impact the score. I do see another question. Are credit reports or history generated in my home country useful in the US? That's an excellent question. So what I would say is that probably varies on a case-by-case basis, right? It depends on what you're applying for. In general, that information won't automatically be on your US credit report, right? We don't unfortunately have that type of transaction and transitional information from one to the other. However, if you're applying for something and you're looking to see if you can use the supplemental information from your home country to bolster your credit and show that you have a history of positive payment, certain lenders or credit card companies may use that in the appeal process, though it's not a promise, it's not a guarantee. So the best thing to do if you're finding that you'd like to potentially do something like that is to contact the entity that you're looking to apply through, and they'd be able to let you know for sure. That is an excellent question. The last two things, okay? New credit and credit mix. Now, new credit is getting a new card or loan. However, it's not whether you actually receive it, it's the act of applying, okay? So for that reason, opening several new accounts in a short period of time represents greater risk, right? Why are we applying for a lot of credit all at once? It looks like you may need help with funding, right? So that looks risky. It also includes multiple applications, not just approved attempts, right? So if you're going through and applying for a multitude of things, one after the other, that can potentially impact your score in a very, very, in a negative way. However, again, it is only 10%. So it's not the biggest thing to concentrate on. Now, there's a couple different types of inquiries related to credit, right? Those looks at your credit report. The first of which is called a hard inquiry, and those are related to your eligibility to borrow something. They're usually initiated by your lender or the credit card company that you're applying to, and those are retained on your credit report. Now, soft inquiries, right? Those are related to general reviews. So if you were to go and look at your own credit report or potentially an employer, if they requested the capability to do so, those are generally not associated with any type of borrowing, and therefore they're not retained on your credit report. And that's important to know because, again, this does include 10% of what makes that score. So if you're looking at making an inquiry, you want to make sure you understand the type that you're making and whether or not it will actually appear on that score. Now, credit mix, this is the diversity of your credit portfolio. Basically that you have, a couple of different types of credit if you can. So for example, if you can get a credit card, maybe a retail account, maybe a mortgage at some point if you're planning on staying in the country. Those are all examples. But again, I reiterate, this is only 10%. So you want to make sure that if you're looking to build credit and really establish it, you're thinking more about those earlier buckets, the payment history at 35% and the amounts that you owe. There's a couple different types of credit, right? We have secured credit, which typically requires collateral like a house, a vehicle, or cash, and there are credit cards that offer that opportunity. Typically, you'll lose the collateral if you don't pay as agreed, right? So if you go ahead and say you're applying for a credit card and they ask for some type of collateral, if you give them that funding and presume not to pay it back, you'll lose that money that you put in. For the credit card side of things, it may be that if you are requested to give that amount of money, that's the total limit, but it may not be. You may see that it's higher. So you do want to make sure you're reading the terms and information related to that particular product. And you'll typically pay those at regular intervals, just like any other type of bill you'll see. They're usually easier to get approved for, right? Because there's that concept of skin in the game. You're investing in this particular opportunity by putting collateral down. However, they do typically have lower credit limits than other types of lending products like credit cards. Now, unsecured credit, that's the type of credit most people think about, right? There's no collateral required, and they typically have higher interest rates than secured loans. Again, skin in the game, there isn't any on that side, right? This is your typical credit card. And then the last one is revolving credit. Now, revolving credit can be secured or unsecured, right? It just means that there's no fixed repayment period. So a credit card is another good example of that. You borrow, you pay back, you borrow, you pay back. And the most that you can typically borrow is your credit limit. Most of the time, you can expect that the minimum payment will be about 1% to 5% of the outstanding balance, just to give you that idea. Now, a few important terms relating to credit, right? One of the really neat things with the US system as far as information goes, right? You are given information related to the types of products that you apply for. So you'll see these different terms in those types of documents as you read through them. So you want to be familiar, right? We have interest rate and annual percentage rate. They're a little different. Interest rate is the amount charged expressed as a percentage of principal by a lender to borrow for the use of money. So that's the one most people are familiar with, right? Then we have our annual percentage rate. Okay, that's the real cost that you pay to borrow, stated as a yearly percentage of the loan amount and includes interest and fees. So if we want to put apples to oranges and comparing them, right? Your interest rate is usually laid out pretty typically. It's a number that they show you on the documents related to your credit, where the annual percentage rate is typically going to be a little bit higher than what you see on your interest rate. The reason for that is you may have different fees associated with your card. So for example, if there's an annual fee, like a $99 fee for the card every year, you'll see that annual percentage rate be a little bit higher. It's meant to represent the overall cost, which includes interest and with other things associated with your loan or credit. So from here, we also want to talk about credit limit. We've mentioned it a little bit already, but it's the total amount that you can borrow. It's important to know that you can only borrow up to your credit limit, but you absolutely can still exceed it with things like interest and fees. So that's why it's important to make sure you're looking at that credit ratio, not getting too close to that limit so you don't wind up in this cycle where you're over the amount just based on fees and interest. I do see another question. Let's see. Do student loans count towards credit scores? Oh, that is a very good question. So when we talk about student loans, right, for our international students in particular, there's several different types of student loans that you may look at. They're all considered private loans offered by individual financial institutions, with each one assessing eligibility in different ways. So at the onstart of things, right, you may have credit involved as far as applying for it. Though that's not always the case, right? Some of those private student loan lenders may look at other things like the type of program that you're going to be attending. They might also look at the projected income for your major and decide based on that. So there's potentially the component of the application side of things. However, it is a loan. So when you do borrow it and you start repaying it, you'll see that does impact your credit, right? It is something that will appear on your credit history if this is a US financial institution. So you want to make sure that you're maintaining that appropriately and making your payment obligations as you're supposed to. Great question. Now, where that information goes, it's a good segue, is through your credit bureaus, right? And those are just companies that collect information relating to your credit history. And there's three major ones in the United States: Equifax, Experian, and TransUnion. Not all companies will report to each of these, right? If you apply for a credit card, you may potentially just see that information on an Equifax report because that's the company's preferred method of assessment. They send their information to Equifax, which means Experian and TransUnion might look a little bit different. Some of them do too, depending on the circumstances. So it's okay to see variances between them, but it's important to know and understand why that occurs. So this way, as you're looking at them, it's a lot easier to identify any potential inaccuracies. So from here, the last one we'll touch on is the total of payments, right? That's the sum of all the payments that you'll have made on an account or loan. Makes sense. It includes the repayment of the principal amount, what you initially owed, right, or borrowed, plus any finance charges, things like interest or fees. Okay, these are important terms again. So as you're reading documents related to borrowing, that you understand what your obligations are. Really important to mention, right? If you get yourself into a point where you're thinking, you've got a card that's a little delinquent and you're not sure what to do, closing an account doesn't make it go away, okay? You wanna make sure that, again, we talked about your credit history and the length of your credit history. You don't wanna just close a card if you don't have to, because it makes your credit history a little shorter depending on where that card is in your borrowing lineage. Also, you wanna be aware that collection accounts stay on your credit report for 7 years. Paying it in full does not remove it, nor does closing the card. That information will still be there. So if that's the way that you're hoping to accomplish that, probably not the best mechanism. Now, iGrad has a really great article with information relating to steps to building good credit now. I would highly recommend taking the opportunity to read that information, and it's linked here on the slide for you, so you can look at a lot of really great different recommendations on how to start building credit. I see a question. Why do I need a credit score? Say I need to pay 300. Why should I use credit to pay if I could just pay directly using a debit card? That is a fantastic question. So this is a lot about really understanding who you are as a person and what your needs might be in the future, right? If you're the type of person that prefers not to borrow and you think it's a good idea just to pay as you go, that's fantastic. It's wonderful. However, if you get to a point where you may need to utilize credit for a larger purchase, let's say at some point in your time with us in the US, you may potentially need a car and you're looking at having an auto loan for that. If you've been going through the process of paying and just, using your traditional debit card process or just the funds that you have, a debit card doesn't help build credit, unfortunately. So that means you're looking like you don't have any credit when you go to borrow those other types of funding. So if you're thinking you might need to go through the process of a borrowing scenario later on, it's good to start building credit for that reason, to establish that history now so you have it when you need it. If that's not the case and you'd prefer to do it all through debit, you absolutely can. If you're thinking that credit isn't the type of thing that you'll need in your time with us, that's totally okay. Great question. So just a few little reminders, okay? Apply for new accounts only as needed, right? Each time we apply, that winds up on our credit report. Important to remember, because doing it a lot can look risky. You want to try and do any rate shopping for a loan or credit cards within a focused period, right? And when we talk about rate shopping, let's say using an auto loan as an example, you might find that one company offers you one interest rate where another company offers another. Some of them have different terms. So you might be applying for several of those at the same time. Most lenders will understand that those are very common things, and you may potentially be able to mitigate some of the risk appearing behavior that goes with it. Although FICO scores only consider inquiries from the last 12 months, your credit report retains the information for 2 years. So you might see that the score, isn't impacted potentially for information that's a little bit older, but it is still there on your credit report, which means that people can see it when you're applying for things. The biggest things that you can do to really, improve credit if necessary, reduce the amount you owe, right? Again, we talked about credit utilization and why that's important. If you only have that 30% utilization, it's a better marker. And borrow money and pay it off on time. The biggest bucket, 35%. Okay. I do see that we had another question come through. What is safer to use, debit card or credit card for everyday transactions? That is a really, really good question. And it's a little difficult to answer, right? There's different types of protections that go into each type of account, right? As we talked a little bit about, there's those debit card transactions fall within the scope of a traditional bank account. However, the FDIC, those protections are more or less related to your money and the bank potentially losing it, okay? Where a credit card, on the other hand, those are different terms, different information, and different types of protections. So the best suggestion that I have is to read through the different terms as you're looking to open accounts and ask those questions. You know, what type of protections do I have? So that you can have a better understanding of the way that you might choose to pursue those accounts. In most instances, credit cards typically have a little bit more protection relating to the everyday transactions that go on. Where, you know, if you're using a debit card, money comes out, it's a little harder to turn around and cancel money that's already been taken, if that makes sense. So however, sometimes you can use debit cards like credit cards. So that's why you want to double check with the different institutions that you have and see how they can offer you the best protection. Great question. Most important thing I can say relating to credit today, request and monitor your credit report for errors, okay? And this kind of gets down to some of the information we were talking about in that last question. A lot can happen with your credit, right? Unfortunately, there are people that prey on different situations, and you may see different things occur, like not just errors, but potentially fraudulent charges as well. So you do want to make sure that you're monitoring your credit to look for those things, right? You won't know about them necessarily before your statement or down the road if you're not looking, right? If that does occur, you want to make sure you contact any impacted account holders and place what's called a fraud alert on your credit report with each of these credit bureaus, okay? And a fraud alert basically just gives you the opportunity to get a notice anytime something happens with your credit. So this way you're not in a position where you're knowing way down the line about a problem. And iGrad has a really great course on protecting yourself from identity theft and scams. So I would highly recommend taking the opportunity to go through that course so you can get a really great understanding of how to manage that situation. I do see a few more questions. U.S. banks typically open an account for incoming international students without credit scores. What paperwork do they request? Yeah, that's a really great question. So U.S. banks, as far as opening accounts, if you're looking to open a traditional bank account, the likelihood is you may not need credit to do that. Sometimes you do need to give other things like an opening deposit, for example, and that can vary by each individual financial institution. But as far as paperwork goes, it's going to vary a little bit from bank to bank, but the big thing is to make sure you have those identity documents that we talked about earlier, right? Potentially the ITIN, that tax identification number, as well as where you live, things like that, so that you have everything you need to open that account, okay? And any recommendations for zero fee banks? Oh, that is another great question. So what I usually recommend to students is as you're looking through, there's a lot of ways that you can potentially get a zero fee account. So for example, sometimes if you're utilizing direct deposit, right, if you're planning on having any type of employment while you're here with us, that might potentially be the way to have no fees associated with any particular account that you have. Also, some of them will make you maintain a certain limit to not have any fees. So the best thing that you can do is make sure you question any entity you're looking for, because they're all going to vary a little bit. You want to make sure that you fully understand the opportunities that are available to you and make sure that they meet your needs. It's a great question. Now, we're just going to touch on this very briefly. This is one of the tools that's available in iGrad. It's their credit score tool. Now, again, it's not going to have your exact credit score, okay? This is just a tool. What it does is it asks you a couple of questions relating to your circumstances. For example, how long you've had credit, when you've last been delinquent, things along those lines. And it gives you an idea as to what your credit score might look like, right? Now, I like using this tool in a little bit different way. What you're seeing on the screen are two different versions of the same tool, right? The first of which is somebody that has a credit score of 707 to 757, right? That's really up there towards that 800. Now, for this person, the circumstances that were set up was somebody with credit of less than a year and had really good payment history, right? They didn't have any delinquent payments. Now, on the right-hand side, this is somebody that, again, 0 to a year as far as building credit, right? This is a new credit person. However, they did miss 1 to 2 payments in the last 6 to 12 months. So theirs is down at 612 to 662. So those missed payments are really, really not something you want to have going on. That can really significantly impact your score for 1 or 2 missed payments. And that's because, again, that payment history is 35%. So if you're thinking that you might want to apply for a new loan, for example, or a new credit card, and you want to get a better idea as to what that could potentially do to your score, one of the things that you could do is put your information in and then manipulate this a little bit, right? Instead of it saying that you haven't applied, it'll ask you how many times you've applied for credit recently. You can put that extra piece in and get an idea for what it may do to your score. Perfect. I do see another question. Are online banks a good and safe option for international students? Yeah, so online banks aren't necessarily positive or negative. The biggest thing is to make sure that you're looking for trusted FDIC insured banks, right? Those ones that have those individual protections so that you know that your money is protected. So if you're looking at an online bank, again, read through those terms. And if you find that they're FDIC insured, that's definitely something that gives you a little bit more comfort in pursuing that particular option. And I say, do I need a social security number before I can be eligible for a credit card? That's a really good question. So I do not believe that you do. I will double check it just to be sure, but my understanding is you should be able to use your ITIN as well because that's associated to you directly. But I will definitely double check it and make sure I include that in the resource materials for sure. Let's see, what is the most cost-effective way to transfer my local funds to my American bank account? Oh goodness, that is another great question. So it's a really difficult question to answer, right? What I would normally recommend is taking a look at the exchange rates that are currently going on and then talking to any financial institution that you're looking at pursuing and see what they charge for that type of service. And then just do some rate comparisons and ask them for that clarification. They'd be able to give you, based on the current date and the current circumstances between the exchanges, the best way to approach it. Let's see. Will it be easier to apply for a credit card if I open an account at the same bank? That is another great question. The answer is sometimes yes, sometimes no. It depends on the way that that particular credit entity is evaluating your information. Some of them may look and see what your banking history looks like. And if you have that banking history, they may potentially use it as a positive in applying for a card, right? Because you have a history with the institution, not because it's on your credit report, but because it's information they have access to. However, it's not a requirement, okay? So they don't necessarily have to look at that. The best thing, again, double check with the bank. They're the best entity to know exactly how they assess those things, and they'd be able to let you know if there's a benefit to doing it that way. Perfect. So in the interest of time, and since we're answering questions as we go, it's been really great. I'm going to keep going. And we're going to move into a little bit different an area. It's creating a spending plan, right? For this, one of the things that we want to think about is really just what steps do we need to do this? And for me, the most important one is probably the last one. But to do this in order, one, we want to make sure that we know what's important to us, right? That has to be the first step. We can't determine what we need versus what we want if we don't know what that means to us in general. We also have to evaluate our income and expenses, right? We're never going to know how much we need if we don't understand how much we're spending and what our resources look like. So it's important to do that. We also want to set goals. Money that's mindless doesn't typically go in a direction that we want it to, right? If we want to do anything in life, we have to set a target projection, and that's what setting goals are. And they apply directly to finances as well. Then we make a spending plan, right? Where we want our money to go. And then we assess, reflect, and adjust. The most important thing I can say about budgeting and spending plans in general, they are flexible. We are not the same people we were 10 years ago. We're not the same people we'll be in 10 years. And we're not the same people we'll be in 5 minutes necessarily, depending on what happens in our day. So our spending plans and our budgets have to be just as flexible as we are as people. And the best way to understand that is by knowing what our values are, our beliefs are, our attitudes, right? How we react to things with money and how we behave in relation to all of these things. So we're going to talk a little bit about that moving forward. First question, do I need it or want it? That sounds really simple. I promise you it's not. I go through this struggle personally when I look to buy things. If you're not sure if it's an expense is a need or a want, the easiest way to find that out is one, question yourself. This is where those values and beliefs and all of those things come in. The way you interact with anything is also how you interact with money. What type of need is this fulfilling, right? And can I do that with a less expensive alternative or without an expense at all? Am I being influenced by external factors or internal noise, right? There's definitely the circumstance of, fear of missing out. You're looking at coming to Columbia University, this really great place with a lot of different cultural experiences and opportunities. You want to make sure that you're also thinking about the long-term goal of your finances in that particular process. Another one, and I think this is probably the most important, will prioritizing this expense disrupt or negatively impact your life? Right? So are we doing something that's going to really be a detriment to us later? That's a really good way to find that out. And then lastly, will you feel the same way if you ask yourself these questions in an hour, a day, a week, a month, a year? This is where our emotions start to come in, right? Let's say you've had a really terrible day and you decide you want to go ahead and buy something special for yourself. Are you still going to need that tomorrow? Are you going to need it in a week? Are you going to need it in a year? And that's the way that you can kind of assess those things. Now, if you're not sure still, because it is difficult, right? You can always look to your networks, the people that are most familiar with you, your family members. If you need to go to a professional or advisor, you can do that as well. Or this is one of my favorite practices to do this, right? Calculating cost benefit, which is really just a personal value metric, okay? And we do this every day, right? If you're shopping, whether it's online or in person, you pick something up, you look at it, you turn it over, look at the price tag, and you decide whether or not you're purchasing it. That is exactly what this is, except it's less of a late version of it, okay? The way that you do this is you're going to make a cost list of potential costs that are associated or are likely to arise, and also a benefit list associated with that purchase of what we call both tangible and intangible benefits, right? When we talk about intangible benefits, we're often talking about things like opportunity cost and what we actually get out of those opportunity losses, right? Education is a really great example of this, right? We wind up paying for it now. However, there's a lot more benefit down the road. The opportunity cost is the time and effort that we've put into things today and for the next couple of years that you'll be doing it. However, the intangible benefit is what it does for you in the long run, the type of career opportunities you have, the satisfaction of having gone through a program. So that's a really great example of this, right? And then basically the way that you do this is you calculate the total benefits and total costs in purely monetary terms and assign each one a value, considering the length of time an endeavor might take, the rate of inflation and interest rates that you might see, and the value of your money today and potentially tomorrow, right? These things change over time. And then you divide your benefit by your cost. And typically a ratio higher than 1 may demonstrate that benefits outweigh the costs, okay? Now, this is actually a tool that's available through iGrad that is fantastic for trying to better understand the way that you engage with your money as far as things like needs and wants and how you might be influenced, right? This is their Your Money Personality Assessment. Basically, you're asked a couple of very simple personality questions, nothing very difficult. And then after doing those questions, you wind up getting about a 40-page booklet or so with information relating to how your personality may influence your engagements with finances. This is actually mine, okay? As an example, you can see that I'm generally considered pretty relaxed. And they don't just give this to me with the information relating to the challenges that may arise from that particular type of attitude, but they also tell me what some of my strengths are, right? I'm not necessarily afraid to take a risk, which can be a good thing. However, I can be a little impulsive. That can be not so good, right? That's that long-term decision-making process. And then underneath it, they give you action items for how to work through your finances with that in mind. I actually use one of these myself. Slow down, take a beat before you buy, because I can be impulsive. I speak from experience when I say if I have a bad day, I might want to buy something. So certainly in this environment, what I typically will do is if I really want something, I'm buying it online most of the time. There's shipping involved with that. That means I don't need it right away. So if I can wait a couple of days for it to go ahead and sit in, transit, I can also wait a couple of days to leave it in my cart, right? So I'll sit it there, I'll go back to it in 2 days or so and look, and then if I still feel the same way, I will absolutely go ahead and consider making that purchase. If I feel like I don't even remember what was in there, I haven't spent money that I didn't need to. So I do see that we have another question. I understand that Columbia has tie-ups with several American banks to help international students open accounts. Do you happen to have a list of such banks? So thank you so much for that question. I don't have a list with that information. However, I will go ahead and reach out to the colleagues that I'm aware of and see if I can get additional information for you. And if not, I'll share resources on where we can get additional information related to that particular question. So thank you so much for asking it.
Also, Tricia, I'd like to add that in the ISSO website, we do have a list of banks that are offering bank accounts to international students. So just please go to our website, type in opening a bank account, and you'll be able to find a list of banks in the area.
Awesome. Thank you so much for that, Maria. See, today I learned that particular set of information. So I really do appreciate it. And I hope that helps to answer that question for you as well. Now, the next step is, setting our goals, right? We're going to talk about goals and systems. And when we talk about goals, I like to think of this in the context of SMART goals, right? And if you haven't heard of them before, SMART's an acronym for specific, measurable, achievable, realistic, and timely, right? These are all important to making sure that we can reach our goals, okay? If our goal is not specific, we're probably not going to be able to create steps to get there. it's not measurable, we're never really going to have the opportunity to finish it. We don't know how we're doing. Achievable, if it's something like, maybe we want a vacation on Mars, that's probably not something we can actually do. So it's not good to set a goal for it. Realistic, meaning that it's important to you. It's a real goal for you. Following goals that other people have in mind for you often are very difficult to achieve because you have to believe in it yourself. So it has to be realistic. And then timely, right? A goal without an end date is very easy to push off. So that falls in the same line as measurable. And the nice thing is that a well-developed system for achieving your goals will determine if your SMART goal is achievable, right? So a system, if we want to think about it in a more common way, let's say you're looking to run a 5K, right? We can't just get up and go run a 5K. I certainly couldn't. Some of us probably can, but I'm not that person. We have to set up a plan for how we're going to get there. So my goal isn't necessarily just, I'm going to run a 5K. My goal should be, I'm going to achieve running a 5K in the next 6 months by doing this, this, and this. I will run for 20 minutes each day for 3 days a week, and then I'm going to push myself for a longer run and then go from there. So that's exactly the same idea that you can employ with your finances, right? Maybe you need to save something for a period of time in order to get there. You can use this for emergency funds and vacations, really just setting up the system for which you will actually achieve those goals. And your systems will answer your SMART goal questions, right? Some of the ways that I like to do this, my favorite mechanism is writing my goal down and then working backwards to identify the steps that I need to achieve it, okay? This works for me because if a goal is too big, sometimes you need to break it down into smaller goals, right? If there's way too many steps in order to achieve one particular goal, the likelihood that you stick with it is low. So set up those measurable milestones, right? Make a smaller goal first using that method of working backwards. And I do see that we have a question about the reporting. We actually will have this recorded, and University Life shared earlier in the presentation that it'll be available through their website within a few weeks after the presentation concludes. So you absolutely will have that. Now from here, right, we talked about understanding how much money is coming into us and how much we're spending. We have to know our income and expenses. The easiest way to do this, you want to think through a period to evaluate, right? Whether that's 2 weeks, a month, the length of a semester. Keeping in mind that semester-based spending can absolutely be a little bit different than spending on a traditional pay cycle. You also want to think about anything atypical that's going on during the period that you evaluate, right? If you have an unexpected medical emergency or financial spending that you don't normally have, or a windfall of some kind, right? Those are atypical things that you wouldn't usually see. You want to account for them. Now, from here, you're going to track your actual expenses and income and analyze those results. The information that you're seeing here on the screen, which I'll include a link to for this presentation with the materials, this is iGrad's daily income and expense diary. And what this is it's about 30 days worth of information where you can track money coming in and money coming out over several different categories. So if you have a paycheck on the first, let's say, that money would get listed there. On the second, you decide you're going to buy coffee, that expense goes into the appropriate bucket. And you do this all the way through with each expense and period and piece of income that you have coming in for those 30 days. And at the end of it, you get a result, like what you're seeing on the left-hand side of the screen. You get a little pie chart that actually shows you how much you're spending on things like housing versus how much you're spending on things like fun stuff, going out. So it's a really great mechanism for better understanding where your money is going. Also, certainly if you're a visual learner. And they also give you those breakdowns on individual components as well. So this is a great tool that you have access to through iGrad that gives you the opportunity to get a better understanding of your money coming in and coming out. And as you analyze this, you want to think through some really core things, right? Did we meet all of our needs? And if not, why? Running out of money at the end of the month is a really scary thought. Okay, did you include all of your expenses, right? Just like we had those atypical things in the period of time that we evaluate, there are also expenses that we might not see every month. So you do want to account for those as well. And on the other side of that, did you have extra resources, right? We're not just looking for negative things in this process. We're looking to excel and accentuate the positive. What are we doing well? If we have extra money, how can we make that work to our benefit, right? We can prioritize and plan for those goals that we talked about, and then we can also prepare for things like financial emergencies, okay? But most importantly, it should be flexible, right? Whatever we do with this, we want to make sure we're including what we need to, but being flexible with ourselves because, again, we change over time. So here, Now that we've evaluated, we're going to go ahead and make a spending plan, right? The big difference here, instead of it being what's actively happening in and out income, this is also going to incorporate that future component, right? The goals that we're hoping to achieve and the direction we want our money to go in, okay? We do want our projections to be accurate and comprehensive, and there's a few different links here on the slide to assist you with doing that. The Bureau of Labor Statistics has information on occupational earnings, and I'm also providing the Consumer Price Index for the New York area, which gives you traditionally both information related to some of the most common expense amounts that we see in the area, as well as the percentages of which they've increased over time. Move.org has similar information relating to utility costs, and iGrad has far more calculators than I can count that also give you a better idea of how your money can grow over time. And again, you'll start developing that spending plan with your goals and your wants and your needs in mind. And there's several different tools to do that. On the left-hand side of the screen, this is a budget tool that's available through iGrad. It's actually in the platform. And the nice thing is, as you use it, it'll let you go ahead through the process by really just kind of putting this information through every tool that's available in the platform. So as an example, there's a course available on budgeting. If you fill out the budget information here, that will be available in the course for you as well when you use the tool there. So it's a really intuitive platform. And again, one of the things that I can really reiterate here is there's several different ways to do it, right? You have to find the one that works for you, and don't assume that if you had trouble the first time you're going through this process, that it's something directly related to you. It could just very simply be the tool. For example, FinTech is a really popular component that's coming around in budgeting. Those apps that you can open up and do your budget with, I can't use them because I ignore the notifications on my phone. So when that notifies me of something, it's not really beneficial to me. So that tool doesn't work. I had to use something else. And then the last step, assess, reflect, and adjust. How did you do? Okay. Did you stick to your plan? Where did you struggle? Where did you succeed? Were you reasonable in making your goals? By asking yourself these questions and then adjusting accordingly, you have the capability to control those things that could potentially put you off track, the stimuli that we have. And by controlling that, we can make better decisions, how we actually react with our financial component decisions. And then we control how we respond to different circumstances, which ultimately helps us control the consequences of things. And overall, helps you control your money, right? Just make sure that you're kind to yourself in this process. Everything is a practice, right? The nice thing is this is cyclical. You're not going to do it once, you're going to do it over and over. So everything that you learn from the first time is going to help you learn over and over and over again as you continue through this process. Now, I mentioned that we want our projections to be realistic and comprehensive. Well, how do we do that, right? One of the tools that's available to you through the university is information related to your cost of attendance, which is a representation of the amount a student may reasonably expect school to cost over an established period. So that sounds like a really great tool for a better understanding what costs might look like, right? And this is actually kind of what you're seeing on the right-hand side of the screen. You might also hear it referred to as your cost of attendance or your budget. There's information that applies to both your academic year as well as your individual terms as you attend. And it's comprised of two different types of costs: your direct costs, those things that the university charges you directly, and then indirect costs, living expenses, books and supplies, transportation, those things that you have to pay for somewhere, but not necessarily directly to the school. So this information is available through your financial aid office, and the information is linked on this particular slide on how you can find out their contact information. But you'll see a lot of the components that are listed here are things that we have to ultimately pay for while we're attending school. And the information that's here is based on reasonable costs throughout the area, much like that consumer price index information is. That's typically what we use to do that and come up with these figures, so you can get a much better idea of how to plan for your finances, looking at this ahead and in advance. You want to make sure you're including some of the really important things in your budget that should be there, right? Housing, utilities, transportation, food, really important, medical insurance and telecommunications, your internet plan, your TV, phone, things like that. However, if you're looking for ways to trim, right? If you're finding that your budget is a little bit in excess of where you need it to be, there's a few areas you can look to do that as well. Gifts and extras, right? I know social life is really important. However, we want to make sure we're spending reasonably in that area. So you want to, there's a lot of really wonderful low-cost opportunities, fortunately, at near the area of Columbia, that you can do, again, at very low cost. There's a lot of museums in the area, and New York has a plethora of opportunities just to be outside and do wonderful things. So there's always ways to have a social life with financial consciousness in mind. Personal care is another area where people typically can potentially trim. I know for me, I have spent way too much money on having my hair done. That's just my past life. Now, one of the things in the pandemic made me realize that's not something I need to do all the time, right? I don't have to spend an exuberant amount on my hair. There are a lot of options that are available at lower cost. So that's something I've personally been able to do. And in your budget, one of the things that can really trip people up is forgetting to include the important things, right? The most common items that we typically will forget, and we're not going to go through the whole list, but some of them include things like seasonal costs, right? A really good example of this is your utility costs. For example, you might see that your heat bill is higher, depending on whether that's gas or electric, whatever it happens to be over the winter. It's cold in New York over the winter. Or on the other side of it, it's hot in New York over the summer. You might also see that air conditioning, as you're using it, can increase that expense as well. So it's about understanding how those things fluctuate over time. Extra medical charges. So if we have medical insurance, right, that's a fantastic thing to have, but there could be other costs associated with it. So you want to make sure that you understand your plan and exactly how much you might spend where and when. So this list is a really great place to start for some of the areas that you could potentially trim and to make sure that you're including everything that you should. iGrad actually has a dedicated topic hub to spending less. This is one of the questions that we received in advance of the presentation, how to kind of minimize your costs, right? It's got a lot of great information related to just how to kind of minimize the amount that you're spending in a very different set of areas, right? So I would highly recommend visiting this section within iGrad to look at the plethora of different opportunities and suggestions that they have on reducing costs related to your general living expenses. You also want to make sure that you're looking at all the resources that are available to you, right? And on this particular screen, we have information about scholarships as well as potential employment opportunities, and these are all linked directly, as well as how you can potentially pursue assistantships, fellowships, and different sponsorships, and information related to employee assistance programs. These are all areas where you can supplement the income that you may already have to help reduce your costs over time. And with this, you'll also be getting a detailed explanation of the different types of sources of funds that you're seeing here on the screen. Now, iGrad actually has a really robust scholarship search engine as well, and this does apply to our international students. They actually have a separate designation, as you can see down towards the bottom left of the screen, that you can filter directly for students that are not requiring U.S. citizenship for a scholarship opportunity, okay? This tool is really flexible. It gives you the opportunity to filter, as I mentioned. It also lets you sort, so you can put the most pressing things towards the top of the list, and you actually can save individual favorited items. You don't need to go to another site to read about the scholarship. You click on it and it gives you the information there. So you're not navigating through a bunch of different areas to find out if the scholarship is something worth applying for you or not. And on the other side of that, iGrad also has really fantastic courses. I mentioned that budgeting one earlier, but they have over 20 different topics that you can pursue, and one of them being searching for scholarships. They actually have a course on that particular topic. On the right-hand side, you can see the courses are all labeled on whether they're an intermediate or advanced course and roughly how long it will take to complete. So this is a really great tool to help you get a better understanding of ways to, one, reduce your income through this, reduce your costs through that scholarship opportunity search engine, as well as ways to learn a little bit more about the finance topics we talked about today. So I do see we're getting pretty close to time. So I'm going to pause because I didn't see a whole lot more on questions, but I see, let's see, I was wondering where we can download the slides or find the links. Yes, so my understanding is that the slides are going to be distributed after the presentation to all of our registered attendees. So you should receive that directly through University Life. Perfect. Now, the last thing I want to touch on before we wrap up today is where you can go for help. Right? This is a lot of information for one sitting. No one's expecting you to memorize it. That's why we send these resources out. Some of the places that you can get in touch with for help are listed for you here on the screen, right? Student accounts, they can help you with things like finding tuition and fees, viewing your bill or your statement, and tax information, okay? Now, the ISSO office also has information about taxes, but they're a different type of set of tax information. That's filing resources, right? Not that they help you necessarily do it, but they have resources that you can utilize as an international student to file your taxes. You also can find your financial aid office directly through the Student Financial Services website. And you also have access to both student service centers, whether you're on the Morningside campus or the Medical Center campus. There's links about the about SSOL and how you can go there, as well as different forms and documents for financial aid. And then, of course, some of the key contacts and who we are in Student Financial Services. I see another question. I guess the person below for the transfer of our local funds wanted to ask what would be the best way if we had cash in US dollars? Would it be to transfer a little amount rather than the whole sum at once? Yeah, so that's a good question. It's difficult to know just because exchange rates can change and fluctuate. What I might recommend is if you want to get a better idea of that, there are certain types of financial individuals that can help with those particular types of questions. And I actually have a resource that I can share with everybody that explains the different types of financial advisors and professionals that are out there that can help with some of those more nuanced questions so that you're getting the best type of information. Now, as far as iGrad goes, it doesn't have a mobile application, but it is mobile friendly. It's designed just to go to the website and work almost like a mobile application directly from your browser. And then we have as international students, what are our options for saving, investing money in financial institutions, if any? Yeah, so you have a lot of the same options that are available to our domestic students, right? You can have access to checking and savings accounts, as well as some of the more standard financial opportunities that are available through those particular institutions. So there's really not a whole ton of limitations as far as what you can potentially utilize. So one of the things that you do want to make sure you understand is the repercussion of doing it for when you go home. One of the things that can potentially, be a concern is retirement investing, right? Retirement accounts are not the same everywhere. So you want to make sure that you understand exactly how much money can potentially go with you, or if you're not able to take it, and then any tax implications from one country to another for doing that. So it's a very, very varied set of information related to the individual circumstances that you're looking to pursue. But the nice thing is I will have, again, those resources available on the different types of professionals that can assist with those individual questions so that you have the best and most appropriate guidance on how to pursue them. Awesome. So the next resource I have here, this is just information related to student financial services and the several different offices that we have. The website actually includes information on who to go to for individual concerns, right? So if you have questions related to payments and deposits, their information is listed here directly. If you're not sure where to go related to a student account question versus maybe a financial aid question, that information is here for you. And you'll have the link to this particular website with the presentation material. So this way, again, no one's expecting you to memorize each office, but we do want to give you the resource to know where to go so you can find out the best way to get the answer that you need as fast as possible. Now, I did mention earlier that there's tax resources available through both the ISSO office as well as Student Financial Services. The ISSO office has information related to resources that are available for filing a tax return, where on the other side of it, the Student Financial Services Office has information on the types of forms that you receive and whether or not you're required to report for things like stipends or just, money paid towards your tuition. Those are the types of things that you would go to Student Financial Services for relating to taxes. So that's kind of the difference between the two. And these are also linked for you as well. And then lastly, these are the different student service centers here at Columbia. And when we talk about those student service centers, they're kind of a hybrid of account information as well as registration information. They're a really great place to start with any particular question you have, and will resource where you need to go individually depending on the question. So again, these will be linked. There are different ones for the Morningside campus as well as the medical campus. So you do want to make sure you're pursuing the one that is best for your circumstance. Now, we talked a lot about iGrad today. What iGrad really is it's a free web-based financial literacy platform that provides lifetime personalized financial wellness education and loan management resources to users at hundreds of colleges and universities nationwide, including Columbia. As I mentioned, this is a no-cost resource to you by being a student at Columbia. You create your account very simply by going to columbia.igrad.com and starting with your full email address. And you'll have access to a multitude of different things like information on managing your money, credit, savings, investing, creating a financial plan. And you'll also have things about personal finances if you're planning on kind of staying here for a little bit longer a period, like mortgages, car loans, and also credit cards and planning for retirement. So I highly recommend creating your account, and I'll be including instructions on how to do that with this presentation. Yeah, so good question. The ID that you're going to utilize, they don't ask you specifically for your ID, but more or less your school email address. So whatever you've decided to retain, if you've changed it to something customized, so you have an alias, you could use that. As long as it has the @columbia.edu or @cumc.columbia.edu, that's what you use to create the account. Perfect. And then what you're seeing here is kind of what you see once you do create that account. This is how you navigate through iGrad, through your dashboard. At the top is a header. So if you want to go ahead and visit individual areas like different topic areas or the courses that we talked about, the plethora of tools, you can do that all through the top. Now at the bottom, there's information that will remind you to kind of double check on things, right? This is an intuitive platform. So it'll ask you to do a financial checkup, make sure your circumstances are still the same so that the information it's providing to you is as customized and current as possible, because the platform is meant to be designed specifically for you. And then it will provide you recommended content tailored to your interests and needs. So whenever you see that financial checkup notice come up, it'll actually give you a little reminder that you need to do that. You can see from the screenshot mine's do. So this is just a really great way to kind of get a good understanding of how to move through iGrad and also keep current with the things that you're working through in the platform. Now, I also want to share resources on monitoring the pandemic. iGrad has a dedicated COVID-19 hub for doing that. So it's a topic hub related directly to things that are important to students right now as far as the pandemic goes. The Department of Education also has information related to student borrowers as well. And we also have our resource guide for the community, and University Life has information on how to engage with the campus virtually, as well as when we get back to the campus. So I strongly encourage you to visit these, take a look through them. And for now, I know we made it just on time, my goodness, but this is my contact information. I do strongly encourage you, if you have questions, whether it's looking how to use the iGrad platform or just, really general financial wellness questions, we can even set up time to chat one-on-one if need be. Please do get in touch with us. It's so important to us that you understand and have your questions answered. So please do take the time to do that. And even more importantly, any feedback surveys that you are given, please do fill those out. As we mentioned, this is the first time we're offering this event, and we want to make sure that we're giving you the information that's most important to you. So if there's something that we did really well, please tell us. If there's something that we can improve upon or a topic that you think is really important to talk through, please do share that with us. It's so helpful. But for now, I will open up the floor to any remaining questions we have with the few moments that are left, and go from there. And I do appreciate everybody sharing the thank yous. It's honestly, thank you for being here. This is such good information to share, and I know that it can be complicated, so I'm happy to have everybody. I do see a question. Is there a way to open a bank account before traveling to the US, maybe through Columbia University? So as far as doing it in advance, there are some online banking options that are out there as long as you have what you need to physically open an account. However, that really depends on if you have those things, right? Like the IDs that you need and if you can communicate that information back and forth. Maria had mentioned earlier, there's actually local banks that are resourced in the ISSO office's information. So you may potentially want to look through those and see if any of those offer that type of opportunity. Great question. Well, everybody, thank you again. We have just a minute left, so I do want to pass it back to my colleagues in University Life. If there are questions that you have after this, please email us at financialwellness@columbia.edu. We're happy to help in whatever way that we can. But for now, Nina, please.
Thank you so much all for attending our webinar, and we are sending out the follow-up email today. So look out for the presentation. And again, the recording, it takes time to be captioned. So just look out on our University Life YouTube in a couple of weeks. So thank you all again for being here, and we will see you in the fall semester. Bye, everyone.
Thank you. Bye, everybody.